Coming to you on a weekly basis, breaking down the real estate market, mortgages, and obviously what's going on in the housing market, particularly in this video today, as I've been in the past a bit, focusing on the market on Ontario. I have some articles, some data, and some information obviously going around on Twitter that I definitely want to share with you, and I really feel will be valuable to you. And I want to thank you for obviously watching my video, following me along here. And again, your likes, your comments, your subscription are always greatly appreciated. So I hope you find this information valuable. And let's begin and get to it. So first, we're going to start off with this article for MoveSmartly. This article is based on last week's decision by the Bank of Canada in terms of the focus was, is the Bank of Canada about to raise rates? And we'll go a bit into those details. Really, on this article, I want to talk about what their stance is in terms of the Bank of Canada, how that obviously affects mortgage rates, and then obviously what's happening in the real estate market today, particularly here in Ontario. And if you haven't heard about MoveSmartly, they definitely produce some of the most interesting reading from a real estate perspective and all things real estate. And you can see here, this is their Twitter page. This is, as you'll read their bio, it's a data-driven analysis and advice on Toronto area residential real estate. Before its news. And this features John Pallas of Real Sophisy and other top insiders within the industry. And if you know John, he definitely operates his own real estate firm here in Ontario, mostly in the GTA, obviously larger focus, but obviously Ontario. And he brings great insights. Him and his team have many years, or I should say decades of experience in the real estate market. So it's definitely someone's, a thought leader in the industry. So why don't we kick it off here with this article, is the Bank of Canada about to start raising rates? So in the last several policy statements, the Bank of Canada has said that it expects to start raising in the middle quarters of 2022. That's rates. And obviously, the drumbeat is getting louder by each day. And then some market watchers predicting the bank is about to move up its rate timetable. Obviously, that didn't happen last week. They didn't raise rates. And the large factor was obviously Omicron and the most recent lockdowns. And obviously, there's a growing risk that the very fear of higher inflation will cause price pressures to intensify even further as people rush into buy now, believing obviously prices are headed higher. If the Bank of Canada believes that these inflation expectations are becoming unanchored, it will likely hike later this month. If the bank's plan are still dependent on pandemic progress, and that's been the case for some period of time, there is no denying that the events have taken a significant turn for the worse, obviously, as mentioned with the most recent lockdowns and Omicron. And again, in such situation, the bank obviously historically, last 2 years, was slashing its policy rate, not hiking it. An important difference this time is that our federal government isn't, helicopter dropping money, which is a metaphor for quantitative easing, where the Bank of Canada buys bonds for the government of Canada, thereby increasing liquidity, obviously, filling the government coffers with money to spend on initiatives, and obviously easier credit to the market, which obviously leads to price increase, definitely financial assets price increases. The Bank of Canada may have banished the word transitory from its inflation commentary in deference to the public's growing concern about the current high inflation rate. Transitory, which has been being used for the last year by the Federal Reserve Bank of Canada, obviously has run its course, and it doesn't feel like it's transitory at this moment. And obviously, we'll see in another 1 year, year and a half if those pressures stay, but obviously some things will stick around in terms of the price increases. Rate hikes won't do anything to alleviate those supply shortages, which is one of the primary reasons that the banks have been saying, is because they're saying it's non-permanent global supply constraints. And because of the delay in these effects, they will impact demand anywhere between 12 to 24 months. So pretty much they've been saying the whole time that, hey, there's supply chain shortages. Because of that, there's less products, and thereby obviously the price of those products increasing. And a classic example is cars, because of the microchip shortage. Cars have obviously never in the history of cars, appreciated rather than depreciate when you drive them off the lot, which is definitely happening in the industry with vehicles. And not surprisingly, and despite anecdotal evidence to the contrary, the data shows that the average wages are still well below pre-pandemic levels. More importantly, wages still have ground to make up of all the employment data in the block or the Bank of Canada's recently created labor market dashboard. If the Bank of Canada doesn't feel forced to alter its plans because of inflation expectations are becoming unanchored, then I don't believe that it will. And I expect it will continue with the central bank's standard approach these days, which financial expert John Malden recently dubbed, talk tough, but drag your feet. Inflation annually for the last year has been at 4.8%. This is the highest in 30 to 40 years. Same thing is happening in the US, obviously, I think about 7% annually, and the highest in 40 years as well. So they've been saying they're going to raise rates, but really they haven't. And I think, is it to set up the market, is to obviously, make people aware, or just set expectations? I believe it's the latter. But, they've been talking about this, and I feel it's on its way. I think really feel March most likely will be a raise. Let's, barring any other variant or something else unforeseen, definitely not COVID related. But that's my opinion. But, if you have a different opinion, please share in the comments. I'd definitely love to hear what you have to say. And we're just talking about here, 5-year variable rates and 5-year fixed rates. You can definitely see here purchases less than $1 million with the down payment schedules here as well. You're seeing here about let's say you have between 20 to 25%. For 5-year fixed, you're seeing about 2.5. And if you're purchasing a house over $1 million, you're seeing about 2.7. Obviously, these rates have been going up and up, so it all depends on which service provider or which financer you're going to. I've also heard high as 5-year fixed as 2.95. So this data, it all depends where it's pulled, but this is just some information to share with you guys in terms of the range that you can be looking at for fixed. In terms of variable, you can see here 5-year variable rates. So let's say you have between 20 to 25%. If it's about $1 million purchase or greater, you're looking at about 1.35%. And obviously variable, the spread between variable and fixed rates has never been larger. As you can see, it's a greater than 1.35, actually double the fixed rate is double the variable rate that you get on the market. Again, 1.35 differs based on which financer you go to. So obviously this gives you a good range of understanding. And this article is in the description, so you can definitely pull it up and have this for your information if you're interested. And ultimately, what the bottom line is here, the 5-year Government of Canada bond yield continued to move higher the last week. So, again, talking about expectations. Expectations lead to higher rates in terms of bonds where the expectation is going. And that does directly correlate to the interest rates that the banks charge us or another financer charges us in terms of fixed rates, as obviously the 5-year bond is moving up. And that's an important consideration to consider. Just because the Bank of Canada said, no, we're not raising now in January 26th, the market starts pricing into, we may get a 25 basis point increase in March 2022. We're going to start creeping these rates out in preparation. So always look for that. In terms of any rate changes from the banks or other financiers in terms of fixed, it's always kind of an indication potentially of what things are to come. Continuing along, and if that continues for much longer, the 5-year fixed mortgage rate that are priced in or that are priced on it will increase. I expect that we will see more of a dovish than expected. Bank of Canada sends those rates the other way on January 26th. So January 26th, they announced, no, we're not going to raise. We definitely are going to raise, and we're going to raise them in the future. That's pretty much, in my opinion, that sums it up what they said. And obviously after that meeting, there was a bit of an uptick, not actually a downtick. So there is definitely more of this on the way, which is definitely the increase of interest rates. How many is the biggest question. My, again, personal opinion, they can't go fast. If they do, that's a policy mistake. I imagine between 2 to 3 rate hikes this year, and that would put them at 1% if it's 3 hike rates, and if it's 2 hike rates at 0.75. And those again are historically low. Again, fixed are almost at pre-pandemic levels, if not inching very close. So that's definitely something to watch. So overall summary, they didn't raise. They said they are going to raise. There's been some increase in 5-year fixed. 5-year or 3-year variable remain the lowest they've ever been, or at least what I've seen in the last couple decades. So that's definitely something to take into consideration when you're making your decision of which way to go, variable or fixed. Lastly, I just want to share what's going on with prices in the market in January. Again, this is a thread from Twitter. This is by Tyson Hinchenberger. And he's a real estate broker here in the region of Ontario. And just here's some high levels, and we're really using the city of Guelph as an example, but I wanted to show you what's happening in the market in terms of pricing and how much supply and demand and obviously liquidity or cheap credit is having an influence in the market. So the Gulf numbers are in. Detached 10.1% increase from December or in January compared to December, and overall is a 6.6% increase just on all housing types from December to January. And in terms of using in a comparison or using an example, let's look at this house here. Okay, this house, I'm gonna zoom in a little bit here. This was a single family house listed in Guelph. You can see here 94 Winston Crescent. It was listed for $699,900 and it sold for $927,000. So it sold for $228,000. Let's say I'm just gonna put the number higher. It sold for $227,000 more than obviously what it was listed. And you can see here in 2020, this same house, like please take this into consideration. On September 2020, this house was purchased for $444,000. And in a year and a half later, on January 19, 2022, this house sold for $927,000. That is a 100% increase on your investment, your home purchase, whatever you want to call it. And that is just a crazy number. If this doesn't paint a picture, obviously, not every house is, increasing in that manner, but many are. And that really is, if this doesn't paint a picture of the housing market in terms of Ontario and obviously, BC being the other larger province, I don't think anything will. This kind of market activity is crazy. I'm still shocked by these numbers, to be very frank with you. As I was talking to my wife, that's a 100% increase in a year and a half. You're not getting that kind of return unless you've been in crypto for the last little bit, or the last 2 years at least. So I hope you found this video helpful. I definitely love coming at you on a weekly basis with this information. We learn together, and I love to hear more of your comments, your feedback, likes, dislikes, and obviously subscriptions. I'm going to continue to come with these videos. This is definitely a strong start for me, and I really appreciate your time. And if there's any suggestions, please reach out to me. I'm always available. And check out my Instagram, Twitter, links in the description, along with these email hyperlinks. And if there's any questions, love to hear from you. Otherwise, have a great week. Stay safe, and I'll chat with you soon. Have a good one. Thank you.